This trade cost me $7,000. So if you guys were watching my last video, I actually spoke about gold being on a 9-week consecutive win streak. And when that comes to an end, there is usually a 3 to 5% historical pullback. And that is exactly what happened. So my macro bias on this was spot on. My market structure was spot on. And as you can see, my entry for this was very sniper, and I was very, very happy with it. Obviously, this was taken on a lower time frame to make sure my entry with my market structure was on point and I was positioned correctly in the trade. And obviously from the macro side of things, we were positioned perfectly. I literally called this out on my TikTok and my YouTube. So anyone that was following along, hope you locked in some profits. But unfortunately, we actually hit my TP1 and went straight back to break even on the trade. So I locked in $7,000 in profits here, let the other half of the position ride, and we went straight back to break even. So I wanted to make a video about, why gold had this retrace, break down my trade a little bit, and then talk about where I think this could go in the future. To start, I'm not a very risky trader at all. When I have locked in profits and I'm happy with my position, you will not catch me getting greedy in the markets. So to me, once hitting a TP1 like this, securing $7,000 in profit, my stops are going break even, and we're letting the rest ride to continue to the downside or break me even. In this case, it was a little bit funky because we went back, retested all-time highs, broke even, and then we're back to basically where we were. So why did gold move back to the upside? I think there's a few reasons for this, and the first would be rate cut expectations and the lower real yield. So investors increasingly expect the Federal Reserve and other major central banks to ease monetary policy, which reduces inflation and yields. Lower real yield lower the opportunity cost of holding non-yielding assets like gold, obviously pushing it higher. So if we go over to DXY, which is the US dollar currency index, you can see that the US dollar has been decreasing from early October, obviously showing a good rip to the upside for gold. These are inverse of each other. Now, this is pretty interesting because the DXY had a good rip to the upside on Monday, along with gold as well. So to me, with the dollar weakness, the dollar's been under a lot of pressure, and that's making gold more attractive for non-dollar holders. At the same time, the structural shifts like central banks reducing their dependence on the dollar-denominated reserves support the hard assets narrative for gold, meaning we're just going to continue to the upside because it is the safest hedge against inflation. Obviously, there's still a strong and institutional central bank demand for gold. We still have a lot of momentum of the buy the dip behavior. I do think a lot of investors and people see this massive fall off and think this is a great area to jump in on gold. And obviously that is just purely speculation, but I do think that is still something to keep in mind when seeing a good push to the upside like this. Obviously, we're still in the midst of government shutdowns as well. There's still uncertainty with the trade war with China and Trump right now. So that being in mind, I did expect some kind of pullback, but not something all the way back to the upside where we're retesting all-time highs, rejecting and pulling off. So that's the macro perspective. Jumping in from the market structure, we did break this low right here, which was good. I did expect a complex pullback of sorts, and then continuing to the downside, we did have some good breaks of structure from the left. Unfortunately, with gold, we've just been ripping so much that there's so many lows to the left. Which one is a true break of structure? So that's obviously where discretion comes in, and that's where the 5 years of me being in the market is really starting to show, and how I can position myself properly for a trade like this. Obviously, we had a bit of consolidation here, broke out to the upside, and retested all-time highs. This is what I find very, very interesting when we retest an area like this that's been tested so many times and then reject off of it and continue to the downside. So obviously, this low right here was an area of interest for me, and you can see that we're rejecting off of it right now in current price action. So I'm very curious to see which way gold decides to move. I'm not going to be taking any more positions in it just yet because we're clearly in a range. We have not broken out all-time highs. We could possibly continue lower, and this trade might have actually been right place, wrong time. So going forward, what are we watching? What are the signals to determine whether the upside continues or whether a pullback will finally show up in the long run? So the first thing is going to be CPI. That's happening later this week. I'm filming this on October 21st, and we have CPI later in this week, and that's going to be a great inflation data point for me to see how the Fed is responding and what the inflation rates are looking like. Obviously, if that's coming in pretty high, we're going to see a good rip on gold and possibly through all-time highs. So I think if the inflation data is actually good, I would foresee a retrace in gold and possibly hit these lows like I was talking about before. But obviously, on the vice versa side of things, if inflation data comes in very bad, this is where I would foresee gold ripping to the upside, breaking all-time highs, and just continuing further. And the next thing for me is going to be the dollar strength weakness, and the continued weakness supports gold, and that could obviously have it rebound to go even higher, but that has to be paired in with the inflation data and the major geopolitical events that are going to be going on. Obviously, new risk will likely drive gold higher and higher again, but we have to see how this trade war pans out. We have to understand what other macro factors are going to be hitting gold in the next week, 2 weeks, the next month. And that's going to be the biggest portion of actually understanding which way I should be trading. So my plan, I'm going to be monitoring a lot of the macro side of things and not paying so much attention to market structure right now, just because gold is in this weird range currently. And I don't think that helps anyone. Personally, I really want to see from the macro side of things how we actually are going to be affected in the economy, and that will actually fuel my moves. So for me, I'm going to stay pretty reserved on trading for the next little bit because I want to see how the macro factors play out on this, and that's going to give me the confluences I need to actually take the right positions. In this case, I'm not going to be looking too much at market structure because gold has been in this weird phase of not smashing all-time highs. We're having retracements off of this zone right here. So for me, I do want to see more macro sentiment before I decide to see what's the market structure telling me and placing an entry. For this trade in particular, I got the technical part right, expecting the pullback, locked in profit, good risk control, but the macro narrative changed. So gold didn't just pull back, it surged all the way back to those all-time highs. That means leaving a little less on the table may have been the play in this case. But if you guys found this breakdown useful, I'm going to be making more of these, and I hope you guys have learned something and can understand the macro sentiment and why the market is actually moving instead of just looking at market structure and trying to plan your trades.